Hey everyone, welcome back to Corporate Decoder. Today we're diving into a proxy statement from Sphere 3D, and trust me, it's more interesting than it sounds. Think of it as peeking behind the curtain of a company trying to get its act together with a few plot twists thrown in. This isn't just some dry corporate document, it's got potential stock splits, executive changes, and a bit of a scramble to stay listed on the stock market. Sphere 3D is holding a special and annual meeting for its shareholders soon, and they need everyone to vote in some key decisions. We're talking about electing directors, picking an accounting firm, approving a new incentive plan for employees, and something called a share consolidation, which we will discuss shortly. This meeting is very important for the direction of the company. First, let's keep in mind that this document is filed by Sphere 3D itself, so it is coming directly from the company. This is important because while they have to be truthful, they're also presenting things in the best possible light for themselves. One of the main things to do at the meeting is to elect 3 board members. These people will be in charge until the next meeting, so shareholders need to choose wisely. The document tells you who the company suggests you vote for, their ages, how long they've been directors, and what they do. For example, there's Timothy Hanley, who has a strong background in business and finance. Then you have Susan Harnett, who has experience with financial startups and insurance, and Duncan McEwen, who has a long history in tech and telecommunications. These are the people that the company wants you to vote for. And of course, the company recommends you vote yes on all the proposals that's expected. The proxy statement also details corporate governance, which is basically how the company is run. We're talking about things like how independent the directors are, how often they meet, and if they have any potential conflicts of interest. There's a section about whether any of the directors or executives owe the company money, and the answer is no, none of them do. There's also information about how the company protects its directors and executives from lawsuits, something called liability insurance. It also tells you how much the directors get paid. Non-employee directors get cash and sometimes stock options or restricted stock units, which are like promises of stock. Next up is the selection of the company's independent auditor, Malone Bailey LP. This is the firm that checks Sphere 3D's financial statements to make sure everything is accurate. It also lists how much the company pays its auditors. In 2024, audit fees were about $621,000. In 2023, they were a little lower at $500. Torty relies on its auditors. These are important numbers because they show how much the company relies on its auditors to keep things in order. The audit committee, which is a group of independent directors, signs off on the financial statements saying they believe everything is in order. Then there's a proposal to approve a new performance incentive plan. This is about giving employees stock and bonuses to motivate them. If the shareholders don't approve this new plan, the company won't have a way to incentivize employees with stock-based awards because their old plan is expiring. This new plan will allow Sphere 3D to issue a certain number of shares, and there are rules about how many shares can be issued and who can get them. Here we can see the compensation for the top executives. In 2024, the total compensation for the CEO was about $3.3 million. The chief financial officer made about $1.1 million. These numbers include salary, bonuses, and stock awards. It's interesting to compare these numbers to previous years to see how executive pay is changing. Looking at compensation actually paid to our PO, the average of compensation actually paid to our non-PEO NEOs and our TSR over the fiscal 3-year period from January 1, 2022 through December 31, 2024. There's also a section about what happens if the company gets taken over, called a change of control. Some executives have agreements that would give them extra money or benefits if that happens. Now we get to the share consolidation proposal. This is where the company asks shareholders to approve a plan to reduce the number of outstanding shares. This is often done to increase the share price, especially if it's fallen below a certain level. Sphere 3D is trying to avoid being kicked off the Nasdaq stock market because its share price has been too low. The company wants the option to consolidate shares on a basis of up to 1 for 10, meaning that every 10 old shares would become 1 new share. It's important to know that even if this measure is approved, the number of shares after consolidation may be different than a straight 110 depending on what the board determines. It's worth knowing that this could make it harder for someone to take over the company. Finally, the proxy statement lists who owns the most shares of the company. This tells you who has the biggest say in how the company is run. Now let's step back and analyze. Sphere 3D seems to be at a crucial point. Their attempt to consolidate shares is aimed at boosting their stock price, but these measures are not guaranteed to work and may have consequences. One of Sphere 3D's strengths is the experience of its board members, although the company has had a recent death in their executive team. There are some warning signs, like having to do a reverse stock split to remain on NASDAQ. In conclusion, while Sphere 3D has a plan, its execution and the market's response will determine the company's direction. It's a company to watch closely. Thanks for decoding with me today. If you found this helpful, please like, comment, and subscribe for more insights into the world of corporate filings. Let me know which company you'd like me to decode next.